right, so let's start now. Let's get started. So as I said earlier, this training is organized by Binance, and by the end of this training, you will actually know why you are here, and I can assure you that it will benefit you a lot. It will benefit you a lot, and it's very important for you to prepare your mind to receive. Even if you are a trader before, you've actually traded on Binance before, I want to assure you that you will get something new added to your knowledge. That is what you've gotten before, and not only that, you are going to, enjoy this section with us. All right. So during the time for question and answer, I will like people to type in the chat box why I take the questions. So during the course of the training, kindly, pen down your questions, and when it's time for question and answer, I will answer them accordingly. All right. Okay, so I'm going to share my screen, and I'm going to be doing. I'm going to share my screen, and I'm going to be doing a practical section that is from the slide to the Binance website, so that I can actually show you how it works and how to use the Binance interface very, very well. So let me share my screen for you guys to see. So if you can see my screen, just let me know. All right. Can you guys see my screen? Hello, can you guys see my screen?
Yes.
All right. So that's great. So
yeah, we can see it.
No problem.
You can see it loud and vividly.
Okay, so today we'll be talking about the basis of crypto trading. The basis of crypto trading. Now, please, as you join the training, kindly mute yourself. Kindly mute yourself so that we can have a serene environment. Okay, kindly mute yourself so that we can have a serene environment. All right, thank you so much. So we're talking about the basis of crypto trading. And this training is organized by Binance. And at the end of this section, you will know how to trade crypto. You will know how to use your local currency, in this case, our Naira, to trade cryptocurrency. And you will know how to buy and sell cryptocurrencies. Okay? So let's get started. Let's dive into it. So my name is Koneswan Paradise. I'm the CEO of Remit Trade Academy, and I base in Port Harcourt. So my personal mission is to accelerate Africans into transition, a sustainable and developed economy by leveraging the innovation in the crypto space. Now, I have a good background in biochemistry. I'm also a forex trader, stock trader, and cryptopreneurship. So I'm very, very enthusiastic about cryptocurrency, its education, driving the adoption of blockchain around Africa and the world. Okay, so at the end of this event, you'll be able to know what Bitcoin is. You'll be able to know what Bitcoin is, and as well the use cases of blockchain technology, cryptocurrency, and how to buy and sell. How to buy and sell. Okay. Now, if you are just joining the training, please kindly mute yourself so that we can have a serene environment. Kindly mute yourself so that we can have a serene environment. All right, so let's talk about Binance. Binance is the world leading blockchain and cryptocurrency infrastructure provider with the financial products or suite that include a large digital assets or exchange by volume. Now, Binance is trusted by millions of people all around the world, and the Binance platform is dedicated to increase freedom of money for users
You did use now.
and futures.
I will join this class later and
Okay.
do for Binance. Come on, it's in back. I keep doing this now. Okay. Everybody
No, online class.
Now trading.
Hello?
Please kindly mute yourself. That guy talking, kindly mute yourself, please. Hello, kindly mute yourself so we can have a serene environment.
The host should mute everybody now so that we can listen.
A minute, please. I'm coming. A minute, please. I'm coming. Few minutes, please. I'm coming. Few minutes. All right, so I believe you guys can hear me now. All right, so let's move on. Now, I want to share my screen again. Now, we are starting over the process. Okay, we are very sorry for the little inconveniences. All right, so let me share my screen now, and then we proceed. So Binance is the world leading blockchain infrastructure that provides financial products and suites, and it includes the largest digital exchange by volume. Now, like I said earlier, Binance is trusted by millions across the world, and the Binance platform is dedicated to increase freedom of money for users, features that unmatched portfolios of crypto products and offerings. Now, one thing that is very good with Binance is because it have two methods of storing its funds. Yeah, there's have what we call the the hot storage and the cold storage. Now, little of their funds are being stored in their, hot storage, that is online, and the majority of their funds is stored offline, that is the cold storage. So it makes Binance very, very good, and the best, when I mean the best cryptocurrency exchange that you can use for trading cryptos and other crypto related assets. So that's very, very important. That's very important. Okay, so let's move further. Okay, now the concept of this trading is based on trading. Okay, the concept of this trading is based on trading, and we are going to look into trading very well, and after that we are going to dive into the Binance platform and show you real-time examples. So I will be going through the PowerPoint, and I will be taking you through the Binance platform live so that you see what I'm talking about with real-time examples. Okay, so trading simply means buying and selling of an asset. Okay, so when you buy something from the grocery stores, maybe in your locality, it means you've actually traded. It means you exchange your money for, a food item or something like that. Or if you want to exchange your old PC for a new game console, you've actually traded. So trading, we can go on and on and on, and you can see that for we to establish that you have traded, there must be an exchange between two parties. Okay, so the principle also exists in the financial markets, be it the stock market, bonds, forex options, commodities, indices. You can mention it as well as cryptocurrency. So for this training, I will be, giving you what you need to know to get started immediately in cryptocurrency trading from the scratch. Okay, so let's move further. So now, the first thing we're going to do in this training is understanding Binance. That is, understanding Binance platform. Okay, so that you can actually trade immediately after this meeting, or when you complete your KYC, you can, start trading. And I can assure you that Binance have been in existence since 2017, and I've registered with them since then, and I've been trading with them since then, and they are the best. When I mean the best, they are the best. Okay, they are the best. So let me log into my Binance platform, and then let me log into my Binance platform now. All right, so thank you so much for waiting. So now I'll be explaining what the platform is all about, how you can go about using it, because for the first time, if you look at the platform, the Binance Exchange itself, it looks a little bit confusing. Okay, it looks a little bit confusing. So I need to explain the platform itself, and then I will tell you what to do before we go further, and then I will teach you how to buy and sell with our local currency. Okay, so when you get to the Binance platform, first of all, you see your charts. Now, the chart shows you the historical price of an asset. Okay, it shows you the historical price of an asset. That means it shows you what price have done before and what is doing currently now. That's what the chart shows you. Now we have the market. The market shows you the pairs. That is where you can select your market pair and you trade and make your exchanges, and also shows you the order box. Now the order box is where you place your trades, and your trade gets executed. So if I go to my Binance Exchange, this is the Binance Exchange. I'm logged into my own live account, my real account, and then if I go to trade, You can choose classic or advanced, but for this purpose of this training, I'll choose advanced. All right, so as you can see, this is how the platform looks like now. For the first time, if you are a beginner in trading, if you look at this platform, it looks a little bit, confusing. But with the help of this trading today, I will help diversify and ensure that you get to know what is what. All right. So this is the chart that shows the historical price action of a financial asset. In this case, BTC USDT. Now, USDT is a stable coin that tracks the value of USD. That means it does not, fall or appreciate drastically. It's almost equal to the US dollar. All right, then we have BTC. So this is the BTC USDT market. Okay, so, and this is the historical price action. This is what price have done before now. Okay, now we also have the order box. So here we call place order. So this is the order box. In the order box, you see buy and you see sell. So let's say I want to buy BTC with USDT. I will click here, buy, and then I will put the amount of BTC I want to buy. Let's say, for example, I put 1. Okay, it will give me the quantity or the amount of USDT that I need to buy 1 BTC. Then I will click buy here, and the trade will be executed. Then the same thing, if I want to sell, my BTC to USDT, the same thing. I will put 1, and then it must not be 1. The quantity of BTC that you have, that's what you will sell. It's just like you go to the market. What you have is what you sell. Okay, so you go to sell, and then you put in the value. You can as well minimize the number, all right, or you type it in. Anyhow you want to do it is the same. Then you click on sell, and the trade will be executed. Now, another thing here is market pairs. Market pairs. That's very simple. If you want to check a market pair, you go to this area, BTC USD. If you click on this small drop down, you will see BNB. This is a market pair, and it's called BNB market. If I click on it, you see that everything here on the right hand side, you see BNB throughout. Why this? You see different types of cryptocurrencies, okay, or crypto assets, but BNB remains the same. That means this is BNB market. We go to BTC market, you see everything on the right is BTC. Why this change? Okay, this means this is BTC market. Now we have altcoins. Now, what are altcoins? Altcoins is any coin except BTC. So any coin apart from BTC is called altcoin. Altcoin means alternative coin. That is alternative to BTC. Okay, so we have Ethereum market. If you see, everything here is Ethereum, and we have the fiat market too. So in this case, I can choose Nigeria, and we see that everything here is Nigeria. So we have different types of market pairs. Okay, so we have the BNB, BTC, alt, and fiat. All right. So these are the different market that we have, and then the chart, the order box. Now there's another thing here called order book. Now, what is an order book? An order book is where your orders are being executed. Okay, let's say for example now you place a buy order. It will reflect in the order book. Okay, and it will match the price of a seller. For example, you are a buyer, and when it matches, it will give you what we call trade. When your order in the order book match, it gives trade here. So let's say you want to buy 1 BTC at this price of USDT. It will transfer it to the order book until there is a seller at this very price. Until there is a seller at this very price. That is when it will get executed as trades here. Okay, so that is the order book. So the order book have series of buy orders and sell orders pending for matching. And when they are being matched, you see it in this section trade. Okay, so I believe you understand the interface very well. Okay, so let's move a little bit further. So what is a market and a market pair? Like I said earlier, we mean the place where you buy and sell. That is where buyers and sellers come together to exchange a certain asset. That is a market. Okay, but a market pair, when you talk about a market pair, we are looking at when you want to buy something, what are you paying with? Or if you want to sell something, what are you getting in return? That is a market pair. Now, when we talk about market pair, it means they exist in pair. So, for example, let's take BTC ZAR, for example. BTC ZAR. Now, this is South African rand. Okay? It means that for you to buy BTC, you exchange it with rand. Okay? That is BTC ZAR pair. Or if you want to sell BTC, you can actually get rand. Or if you want to buy BTC, you can buy it with rand. That's what it means. Now, the market pair BTC ZAR indicates that if you want to buy BTC, you have to pay it with rand. And if you want to sell, you can also pay in rand. I've said that earlier. The same thing with Ethereum, that is ATH-NGN. It means that a user can buy Ethereum using Naira and sell Ethereum and get Naira back. That is a market pair. They exist in pair. Okay, so that's a market pair. I've shown you that. Now, let's go to types of orders in the cryptocurrency market. So we have three main types of orders. We have other types of orders, but these three main types are very, very, very important. So we have number one, the limit order. We have market order, and we have stop loss order. Now, I want to explain each and every one of these order step by step so that you understand. Now, a limit order is an order you place to buy or sell a particular financial asset at a specific or a better price. Okay, at a specific or a better price. Now, this price at which you want to buy is called the limit price. Now, when you place that order, you are executing at the limit price or lower. That is when you place a limit buy. Now, when you place a limit sell, you are executing at the limit price or a price higher. Now, why does this occur? Now, let's say, for example, you have a pair of shoes and you want to sell that pair of shoes, and you specify your price that you want to sell the pair of shoes. Okay, the order will get executed at that price or at a higher price because you want to sell. Okay, if it executes at a higher price, it's a better price, but it will not execute below that limit price. That's why we say it is a specific price or better price. So if you place a limit buy, it will execute at the limit price or lower so that you can buy low, which is at your own advantage. Then if you execute a limit sell, it will execute at that limit price or at a higher price, which is also at your own advantage. So limit order is an order you place to buy a financial asset or a financial instrument, in this case cryptocurrency asset, at a better price or specific price. Now, market order. A market order is an order you place to buy a particular cryptocurrency asset at the current available price or the market price. So we can also call this an instant execution. Now, this one, you don't have to wait. It executes instantly because you are not setting your price. You are telling the exchange, give me at the price the market is, and it will just go through. So basically, it is the fastest way to get in and out of the market. So when you are setting a market order, you are basically saying, I want to execute now. Place my order now. And when you place that order, it gets executed instantly. Now, The last type of order we'll be discussing here is stop loss order. Okay, now, what is a stop loss order? Now, we understand that in trading, you have to, guide yourself against losses. So the stop loss order is used to limit a trader's loss. So let's say, for example, you buy a particular financial asset at a specific price, and the thing is turning down against you. You can actually set a stop loss order so that if it goes to a certain point, it invalidates your analysis. Thereby, it will stop you out so that you don't lose any further. Okay, so a stop loss order is a type of limit order or market order that only activates when a certain price is reached. So this price is called the stop price. So the purpose of using a stop loss order is to, mainly limit the losses of a trader. I've said that earlier. And every trade needs an invalidation point, which is the stop price. Okay, so this is the level where you say, that's the invalidation point now. Is the level where you say, okay, my idea about this particular setup, that's a trading setup now, is wrong. So that means I will exit the trade or the market at this point so that I prevent myself from losing further. So that point where you exit the trade when the trade is wrong is called invalidation point. And that is where your stop price is. Alright, so let me go to the platform and show you what I mean. Because as I said earlier, this class is a practical class. Alright, so as you can see, this is the limits order, this is the market order, and this is the stop limit or stop loss order. Alright, so let me start with the market order. Now, if I want to buy BTC, as you can see, I have 186 USDT in my balance. So let's say I want to buy BTC instantly, okay, at market price. So I will just type the quantity of BTC I need. This is 0.000006. Okay, if I type this and I place buy, it will execute instantly. Okay, now limit order. So let me place a limit order here. So let's say, remember a limit order, you want to place an order and you want to specify your price. So let's say this is the chart and you want to buy at this price. Let's say you want to buy at this price. That is 12,810. Okay, you want to buy at 12,810. I can actually come here and specify my price. I will specify my price, 12,810. That's the limit price I want to buy Bitcoin with USDT. Okay, so I will place the quantity of Bitcoin that I want to buy, 0.0005. Okay, this amount to 6 USDT. Let me increase a little bit. 5. Okay, this is 46 USDT. So if I place buy, now, you see, they say a limit order has been created. Now, if I go here, you will see, if you can see my cursor, you see the limit order here. Now, this order will pen here, pending from when this price here will move down to where my order is. You can see my order here. It is when it comes to this price, that's when it will execute. Or a better price down. Because I want to buy. So I believe at this point, Bitcoin is going to go up. Okay, so that's how you place a limit buy order. The same thing when you want to place a limit sell order. Just put your cursor here and then activate the sell button. And then you put the price at which you want to sell your Bitcoin to USDT. And then you put the quantity. And then you place your sell. Once you place your sell, it will appear here as well as on your chart. So that's how you place your limit buy order and limit sell. Now, the last one is your stop limit order. Now, like I said earlier, the stop order, the stop loss order is used to limit a trader's loss on a particular financial instrument or asset. when you are trading. So that point where you place your stop is your invalidation point. So at this point, let's say I wanted to, let's say for example, I wanted to buy Bitcoin. So I put buy here. I go to stop limit. I'll put my stop. I'll put my stop. Now, the price where you're putting your stop will be the price. Let's say, for example, this level. That is your stop price. Now, your limit price will be up a little bit because at your limit price, the trade gets executed. I hope you are getting me right. At your limit price, the trade is initiated. But if it comes to your stop price, it will stop you out of the trade because at that point, if it continues to go down, you are losing. So it will automatically close the trade for you and sell back Bitcoin automatically for you. Okay, so the stop limit or stop loss order is used to limit a trader's loss on a particular financial asset, in this case cryptocurrency assets, for example BTC, USDT. So you can come and cancel your order. Like in the case of limit order, I can come here and cancel it. Okay, they will tell you your order has been cancelled and my money will return back to my balance. So that is limit price, market, and stop limits. I said market, you are buying at that market price. So if I just put anything here and place buy, I will buy Bitcoin and it will get executed. All right. So that is types of orders. Now we are getting into the real deal. Now I want you to pay rapt attention because this is the most important part of the training. Because with this, you can actually trade on your own. You can actually trade on your own with what I'm about to share with you now. Technical analysis versus fundamental analysis. Now, fundamental analysis, when you're talking about fundamental analysis, you're looking at an underlying factor that can affect the value of an asset. So, for example, in the case of Bitcoin, you're looking at the number of addresses, the hash rate of Bitcoin, and the trading volume. Now, if the hash rate of Bitcoin is going up, if the hash rate of Bitcoin is going up, it means that Bitcoin will actually go up. Now, if the buy volume of BTC is high, it means that BTC is like going to go up very soon. Okay, so these are fundamental analysis. Fundamental analysis means that you are not looking at charts. You're not looking at the cryptocurrency chart, in this case Bitcoin, to predict or to tell where the price of Bitcoin will go to. You're actually looking at the addresses, the hash rates, and the trading volume. Now, technical analysis, popularly known as TA, you are using historical price action and pattern trends to actually match and predict the price of the market. So in this case, you are using charts, you are using technical indicators, you are using any tool at all, trend lines, Fibonacci levels. You are using all these two combinations. Draw them on your chart just for you to know how the market has been moving before, so that you can use that to predict what the market is doing right now and what it will do in the future. Okay, so example of this is your charts. All right, so using technical analysis. Now, the main tool in technical analysis is the candlestick charts. Look at trend lines and support resistance level. Common technical indicators in the cryptocurrency markets and how to use RSI, moving averages, and the Bollinger Bands. So, this is your chart. This is your chart. And this is where you do all your analysis. This is where you do all your analysis to tell where price will go next, where it will stop and go up. If it's going up, where it will stop before coming down. You do all those analysis on your chart. All right, let's move further. Now, candlestick charts. The candlestick chart is one of the most popularly used tools. Now, before now, there were no candlestick chart. Traders were using line charts and bar charts. Before the 17th century, where the Japanese right trader actually developed the Japanese candlestick, what you are seeing on the screen now, the Japanese candlestick, and it was refined in the 20th century by Charles Dow. So, the main component of the candlestick charts that you have to take note of, pay great attention to, is the open price, the high of the candle, the low of the candle, and the closing price. So this refers to the OHLC values. So the open and the close are the first and the last recorded price for a given time frame, while the low and the high are the lowest and the highest recorded prices, respectively. So in the case of Bitcoin, I'm going to show you how to read a candlestick chart very, very well. Very important. Now, let me widen my screen a little bit. I believe you guys can see my screen. So this is BTC USDT. I can actually change this to BTC NGN, that is BTC Nigeria Naira. But for this trading, let me use BTC USDT. As you can see, this is a candlestick chart. And this is a candlestick. Now we have two kinds of candlestick. We have bearish candle and bullish candle. Now, these red ones, these red candles are bearish candles, while the green ones are bullish candles. Now, what does bearish candle mean? Bearish candles means price is going down. When a bearish candle is formed, it means price is going down. And when a bullish candle, the green ones, when they are formed, it means price is going up. Now, the first thing you have to understand about the candlestick is the candlestick infrastructure. Now, from the point here to this point, you can see my cursor. From this point to this point is called the body of the candle. Okay, from this point to this point is called the body. While the small line on top of the candlestick is called the tail, or the shadow of the candle. Now, in this case, this is a bullish candle, which means price is going up. This is the opening price, and this is the closing price. This is the highest high of the candle. That means price come to this very level, but close at this level. Price come to this level, but close at this level. It means, in this case, price come to this level. This is where it opens, but price reaches here and go back and close here. I repeat again. This is where it opened. This is where this candle opened. After the opening, price comes to this level, comes back up, comes up to this point, which is the highest high, and close here. So we have the high, the close, the opening of the candle, and the lowest low. That is the lowest place where price reach for this particular candle. Now, on candlestick charts, you also have different time frames. In this case, this is 4 hours charts. You can see this 4 hour charts. I can change it to 6 hour. I can change it to 1 day. Okay, now this is a 1 day chart. What does a 1 day chart mean? It means that each of these candles is formed in 1 day. That's 24 hours. The same thing. 4 hour charts or 4 hour candle means each of these candles is formed in 4 hours. That is, at the expiration of 4 hours, the next candle forms. At the expiration of 4 hours, the next candle forms. The candle can be bullish, it can be bearish. Okay, now the same thing happens to a bearish candle. Remember I said when price is coming down, it forms a bearish candle. So from this point, this is the opening price, and this is the closing price. We have the highest high, and this is the low of the candle. So that is how you understand the infrastructure of candlesticks, so that it will help you or aid you do your analysis when it comes to, doing your analysis in crypto trading. Okay, very, very important. So let's move further. Now, trend lines. Trend lines are widely used by both trader, that is fundamental trader, and technical trader. That is, a fundamental analyst use trend line as well as technical analyst. So they are lines that connect certain data points on a chart, and typically the data price is not only in all cases, but some trader may also draw the trend line on technical indicators and oscillators. All right, so the idea or the perception behind a trend line is that if a trend line, for in this case, was drawn from this point to this other point, it means that if price come back to this trend line, it will reverse up. Reason why? Because it obey here and here. Okay, so the first thing you do when drawing a trend line is to find two significant points in such a way that the trend line won't cross the chart. Although in advanced trading, you can have, trend line in between lines. That is trend line in between charts. But for beginner, it is advisable for you to know that when you're drawing your trend line, especially the major trend, don't allow your trend line to cut across the chart. Find a significant point, two significant points, like in this case, one, you see two, and then connect your trend line. Now, that means that if price comes to this level, at this point, it will bounce back. Reason why? Because price bounce back here, and price also bounce back here. So this is an incorrect way of drawing a trend line. If you just draw your trend line and rule it over and connect to this point, it is wrong, especially after the formation of this whole chart. So in this case, let me show you a practical example of what I mean. In this case, this is my chart. If I want to draw a trend line, these are two in which you can use to do your technical analysis. But for the purpose of this training, we'll limit ourselves to certain two. So you pick your trend line from here. You pick your trend line. You draw your trend line. You draw it out. Okay, you can see the first point, the second point. Don't draw your trend line in this format. This is a very wrong way of drawing trend line, because this point is actually omitted, which is wrong. So you draw your trend line in this format. What this means is, if price comes back down, that's the price of Bitcoin now, comes back down, and it touched this trend line, there are high probability that it's going to bounce back up. Reason why? Because price tests this level, go back up, and also test this level, go back up. Okay, so that's very, very important. So ensure you draw your trend line correctly, and don't draw trend line in this way. It's wrong if you draw it in this way. Okay. All right. Now, resistance and support level. Resistance and support level is one of the most widely used concepts or discussed concept when it comes to trading. Either you're trading cryptocurrency or any other financial assets or any other financial markets. Support and resistance level is very important. Now, what's a resistance? Resistance means that a point where price finds resistance. That is a point where price is hindered from going up. So we call this point or this area a ceiling. You can see this line. This is ceiling, resisting price from going up. It resists the first time, resists the second time. So this is a resistance. Okay, so the resistance level is an area of significant supply. That means there are buyers here. Sorry, there are sellers here at this level, waiting for when price to come to this level, they will hit price down. Price come to this level, they bring price right down. Okay, so look at resistance as a ceiling hindering price of a particular financial asset or cryptocurrency asset from going down. While support is like a floor where price find a little bit of rest before going up. So the support area can also be called buyer's area, because we see buyers here buying the asset, it move up. A buy, it move up. A buyer as well, it move up. Okay, so this is buyer's zone. Support zone is buyer's zone. Resistance zone or level or area is seller's area. Take note of that. Very, very important. Okay, so let me go to my chart and show you what I mean. So let me bring up another chart. Let me use a fiat Nigerian naira to do the other illustration. So let's say BTC NGN. This BTC NGN pair. So let me maximize my chart so you can see it very well. I hope you guys can hear me clearly. Okay, so this is 4 hours chart. I can put it to 1 day chart. This is a 1 day chart. Now, if you look at this level, price was resisted here. This is support level. So I can bring my line, support level, this is a resistance level. Okay, you can see when price comes to this level, it comes back down a little bit before going up. You can see price move up, come to this support level, move up, and finally breaks through this level and finally go right up. So support and resistance level are very important concepts. It will help you know the area or the point where price will be resisted back down in the case of resistance, so that you can take advantage of selling. While support level will help you know levels where the market will reach and then go back up. In this case, you can see here, market goes up, market comes down, goes up a little bit, comes down again, hit the support level before move up. So it's very important for you to understand support and resistance level. Let me go back to 4 hours chart and show you more example. All right, let me find a good you can look at this level again. This was a good support. This is a good support level. Market come to this level, goes back up, come to this level again, goes up, retests the level and goes up again. Now, remember, one thing you have to understand is support and resistance level are not a particular point. It's not a particular point, it's a zone. So when you are drawing your support and resistance level, you draw it as a zone and not a particular spot. Okay, you can be looking at a particular zone that if price come to this zone, it will bounce back up. And that's your support level or support area or zone. Either you call it zone, level, area, you are correct. Okay, so that is support and resistance level. Very important. I said resistance level act as a ceiling for price to come down when price reaches that level, while support level acts as a floor, and it helps price to go up when price comes to that very level, as you can see here. Now we'll be talking about some technical indicators. And the first indicator we'll be talking about is relative strength index. The relative strength index. Now, the relative strength index is a momentum oscillator that shows the strength and the weakness of a financial asset. Okay, so it uses a simple, illustration whether an asset is overbought or oversold. I will show you that in a moment. So the indicator helps a trader, a technical trader in this case, to know when to buy a financial asset, a cryptocurrency asset, and when to sell with the use of the indicator. So most time indicators are used as confirmations of a trader's position. Let's say you want to buy and you're not very sure of buying. You can use your RSI, that's relative strength index, to determine whether you can buy now or wait. Okay, so it's very simple to bring up your RSI in your chart. You go to we have indicator here. You search RSI here, that's relative strength index. See relative strength index. If you click on it, you see the relative strength index here. Now, let me explain what it means. Now, the relative strength index, like I said, shows the strength and the weakness of a financial asset. Let me zoom it out so that you can see it very well. Now, the relative strength index have value ranging from 0 to 100. Now, from 60 to 100, in this case, from 60 to 100 is what we call overbought condition. From 60 to 100 is overbought, while from 40 to 0 is oversold. Now, what is overbought? Overbought means that the market has been buying for a long time, and that very soon seller will begin to bring the market right down. That means when the indicator goes to the overbought condition or the overbought zone, it means you should look out for market turning back down soon. In this case, you can see this RSI is at overbought, and if you can look at this chart right now, NGN is going down. It means the market is going to go down. So it helps affirm a trader's analysis. So if you were a little bit confused about if to sell or buy, with the help of the RSI, you can know what to do. Now, another aspect of the RSI is oversold. Now, oversold condition or oversold area means that the market has been going right down for a long time and that the market is going to go up. So you can see here, this was oversold condition. From 40 to 0 is oversold. The RSI was here at oversold condition. If you can see the chart was lingering around this point with no strength. Now, after then, we see the market rise a little bit. It crossed over the 40% mark, move into this region. The RSI starts trending up. As the RSI trend up, the market moves up. That means if you wanted to buy, the good time for you to buy this asset is when the RSI is at oversold, because it means that the market has already been selling for a long time, and that is going to sell soon, and that you should prepare for a buy. That means you're supposed to buy at this very point, and then you sell when the market is at overbought. Buy when the market is at oversold. Very simple. I repeat myself. Buy when the market is at oversold. Sell when the market is at overbought. Overbought is from 60 to 100 and oversold is from 40 to 0. The indicator can be manipulated, like it can be, the parameters can be adjusted. Like you can use 60, in this case, you can adjust it to 70 to 100 to be your overbought condition. Okay? Now, the next indicator we're looking at is the moving averages. Now, the moving average is a very, used tool, but it lags behind the markets. What does I mean by that? Now, it lags behind the market means it does not follow the markets as it is. It's not telling you what the market is doing at that particular spot. So they lack predictive qualities. So in other words, they are lagging indicators. They lag behind the markets. And we have several types of moving averages, but the most commonly used ones are the simple moving average, in this case simple moving average, and the exponential moving average. So you can as well put the moving average. You can remove our RSI. You can remove our RSI, then go back. You go to indicator, this indicator sign, and you search for moving average. Moving average. Okay, you can put moving average. Either it's one line or two. Okay, it's the same thing. You can decide to use 2 lines, 3 lines, depending on what you are looking out for. Now, the other thing about moving average is there's what we call moving average crossover. Now, at this point is a point where you trigger your buy, because at this point where the crossover occur, it means that the blue line cross over the red line. It means the market is going to go up. So if you are trading crossovers and you see the blue line cross over the red line, it means market is will go up and that you should buy the market. Now, as you can see, the red line is 50 MA, that is 50 moving average, while the 15 MA is the blue line. So what does 15 mean? Now, 15 means that this moving averages is calculated by taking the last 15 days prices. That's prices of the last 15 days divide by 15. It will give you an average where this line is plotted. It's just like a graphical mathematical representation of what price is doing. Okay, so 15-day moving average means, or 15-period moving average means, you are taking 15 days price, closing prices, divided by 15. While 50 MA means you are taking 50 closing prices. That's 50 days closing prices divided by 15. It will give you where it will get calculated. Okay, so it gives you the moving average. Now, one thing about the moving average is it acts as a dynamic support. It acts as a dynamic support in the case of an uptrend. If you can see, this market was going up and it acts as support for the market to go up. And also it acts as resistance in the case of a downtrend. Moving average example is simple moving average where you have one here. It acts as a resistance in the case of a downtrend. Okay, so that when it hits the moving average, in this case, market goes down, you are expecting when it comes back to hit this level, it will still go down. The same thing in the case of uptrend. So it's very simple to use the moving average. So the moving average in the case of an uptrend has a dynamic support, while the moving average in the case of a downtrend, when the market is going down, it acts as a dynamic resistance. Take note of that. The last indicator we're talking about is Bollinger Band. Bollinger Band. Now, the Bollinger Band was discovered by a man called John Bollinger in the year 1980. And the Bollinger Band is a volatility indicator. So it shows place where you have little volatility. That is price increase and decrease. That's what we call volatility. And it also shows where you have high volatility. That's where you see drastic price movement. So when price increases, you see the Bollinger Bands expand. Now, the Bollinger Bands have three main components. We have the inner band and the outer bands. So we have two outer bands. This one is called the lower band. The middle one is called the inner band, while the outer band, this outer band here, is called the upper band. So we have the upper band, the middle band, and the lower band. So the Bollinger Band comprises of three lines. So take note of that now. The middle band is a moving average, like we saw in this case. Like we see in this case, it's a moving average, just like this. It's a moving average. And the upper band is an N standard deviation. That's an N period standard deviation from the middle band. That's how it's calculated. So the upper band is calculated, you can say a 2 standard deviation or 3 standard deviation, depending on your setting of the Bollinger Band. All indicators can be set to suit your trading methods or your trading strategy. Okay, so you can say the upper band is N period from the moving average. It can be 2 periods from the moving average. The same thing will occur here as well. Okay, so the Bollinger Band is used for volatility. Now, if you look at here, when price goes up to the upper band, it gets resisted down. When price touch the lower band, it finds a support up. So you can say that in a uptrend, let's say the market was going up. When price comes to the lower band, it will find resistance. And when it comes to the upper band, it will find, when it comes to the lower band, it will find support. And when it comes to the upper band, it will find resistance. That is in an uptrend. In a downtrend, the same thing. So let me show you what I mean in real time. Okay, so you go to indicator, you search for Bollinger Band. Bollinger Band. So once you put it on, you will see the Bollinger Band here. So as I explained earlier, we have the middle band, the lower band, and the upper band. The middle band is a moving average, while the other two bands are standard deviation from the moving average. Now, I said in the case of a downtrend, let's say this market was going down. If you look at the direction this market is going down, okay, BTC, NGN, that's Nigeria, is going down. So market goes to this point. At the point of this area near the lower band, it found support, goes up, comes back down, found support here. You can see here it finds resistance at the upper band, goes back here, finds support, go down, just like that. So you can see that at the lower band, that's when the market comes to the lower band, it found support. And when it comes to the upper band, it finds resistance. In the case of an uptrend, that's market going up, you can see the Bollinger Bands find resistance on the upper band. You can see resistance on the upper band. And then sometime, in the case of a rapid movement to the upside, the moving average, that's the inner band, can as well, or the middle band can as well serve as support or resistance. Okay, so that is the Bollinger Band. So how can you actually use the Bollinger Band? It's very simple. When market comes here, in the case of an uptrend, when market comes to this point, if you observe that market touch here for the first time, touch second time, it means that the third time there are possibility or likelihood that if the market touch the middle band, is going to go up. Okay, so that is the Bollinger Band. So you place your buy here for the market to go up. Very simple. All right, so we have types of trading methods. We have scalping. Types of trading method, we have scalping, and scalpers or scalping uses, smaller time frames. And when you are scalping, you are called scalper. When you are doing scalping, you are called a scalper. Okay, so
confirm something.
Who is speaking, please?
The person speaking should off his mic.
Please off your mic. Mute your mic button. So this.
Off your mic, please.
That guy that is speaking, off your mic, so we can continue. All right, so scalping. In scalping, you are actually taking short positions.
Depend on this thing to trade before once in a while.
All right, guys, so let's continue. Now, scalping, you are looking at the short time frames, okay, so that you can actually enter into a position and come out using or taking advantage of smaller price fluctuation, entering and exiting your position frequently. So scalpers, they mostly use, the lower time frame like 1 minute charts, 5 minute charts, or 15 minute charts at most, okay, because you are looking at entering the position in and out. If you look at 1 day chart, you can't be a scalper because it's very dull. So you have to go to the smaller time frame to look at your trade so that you can enter in and out of a position frequently. Now, another types of trading method is day trading. Now, if you go to Wall Street, those of you that watch CNN, you actually see those men on suits, okay, with their laptop or their iPad, looking at the way the market is moving and taking trades. They are actually day traders. So you see them on Wall Street. So a day trading strategy involves entering and exiting a position within the same day. So a day trader don't extend their position to the next day. Their trades stay within that particular day and it does not extend to the next day. So in cryptocurrency market, as you probably notice, it's not an exception. So you can trade around the clock every day in a year. And the best thing about the cryptocurrency market is that it does not have a pause. As other markets close on Friday, like the forex market and commodity and stock market close on Friday, cryptocurrency market is still open Friday, Saturday. You can trade as many times as you like, or anytime you like. You wake up, you start trading. Okay, so in day trading, you are often relying on technical analysis and determining which asset to trade, because profits in such a period of time can be minimal, so you opt in and out of a position frequently. Okay, so this style of trading is obviously very, very active because you are to be on your chart always trading. So sometimes day trading is always very tasky because you have to be on your computer and performing your trades 24 hours. Now, another trading methods that we have is swing trading. Now, swing trading is mostly for investors that uses fundamentals. So they look at the higher time frames. Okay, so the positions are usually held over a couple of days and months, and they take a swing part of the price. I will show you what a swing price is or a swing point is in the markets shortly. So often their goal as a swing trader is to identify an asset that looks undervalued, and then that will likely increase in value in a period of time, and then they will purchase that asset and then sell the assets back when the price rises to collect their profit. So when they are finding the underlying asset, they can as well, look at the technical indicators. But they, base their training on fundamental analysis. They base their training on fundamental analysis, which is very, very important. Okay, so that is swing trading. So swing trading is performed by a swing trader, and they look at the 1-day chart, or they also look at 4-hour chart and 1-hour chart. Swing traders don't look at the smaller time frame like 15 minutes, 5 minutes and all that, because it's very clumsy and have a lot of noise. So swing traders look at higher time frame, and they stay in the market for a very, very long time, and probably they may have a very big pocket, okay, so that they can hold the undervalued asset, so that when price goes up, they will actually, sell their assets for profits. Okay, so now putting everything together, you have understand how to, use the Binance platform. You know what order book, the charts, technical indicators, how to use it, how to use trend line, and everything. Now, I am going to show you how to use your Nigerian naira to buy a currency. Now, for those of you that actually, registered, I told you that Binance have a gift for you, and it's $5. So for you to be able to grab the $5, you actually pass through the link that I gave in the group, and we pass through the link. You have to get verified, complete your KYC, and then you place a trade. You buy and sell with your local currency, and then do some chart setting. That one's no problem, but the most important thing is for you to buy in your local currency. So it's very, very simple for you to buy in your local currency. So let me give a practical demonstration of how you can buy in your local currency. So it's very simple. If you open your platform, that's the Binance platform, you go to this point, NGN, you see buy crypto, you see NGN, pay with bank deposit. If you click on bank deposit, it will actually bring out this guy out. Then these are other, currencies in which you can trade, but for Nigeria, you use Nigerian naira. So you can see these are transactions that I've done before using my bank transfer, which is very, very simple. I'm going to show you now. So you click on bank transfer. Don't choose card. If you want to use card, no problem. Now, bank transfer have 150 NGN. That's 150 naira as a charge. And then if I want to deposit, let's say 20,000 naira now. Okay, let me bring it down a little bit. Let me say 10,000 naira. I want to deposit 10,000 naira. This one is very important. Reason being that it will help you. Let's say, for example, you have someone that want to buy Bitcoin or any cryptocurrency at all. You can as well deposit your naira and then convert it for profit. You can charge the person any amount depending on the bargain, and then you come here, buy with your Nigerian naira, and transfer the crypto coin to the person for profit. So it's actually a way you can, profit from trading without actually doing chart analysis and all that. So if you put the value here, you see they say fee. This is a fee they will charge you, which is 15.0. That is 150, and this is what you will get. So I want to do a practical demonstration so that you see. If I click on continue, so before you click on continue, your internet banking or your mobile transaction should be on. So in this case, I will do a transfer. It's very simple. That's why I like Binance. I will do a transfer to this bank account. Okay. I'm doing the transfer now. This Wema Bank. I'll choose Wema Bank here. Then I'll put in the account details so that you can buy cryptocurrency on your own from the comfort of your home. Very simple. And set it out for profit. Okay. So I will click here. I'm doing the transfer now, guys. Just few minutes. 10,000 naira. Ensure you put your 10,000 naira amount. Don't put the amount you will get, because 150 naira from this, okay, for charge. So you put 10,000, and then I will do the transfer from my end. So we'll continue with the transfer. All right, once the transfer go from here, I will click on I have made this transfer. Okay, it has gone. I have made this transfer now. In the next 4 minutes, it should reflect. Okay, so don't close the page, just leave it. It will reflect, and I'll go back and show you Nigerian Naira in my account, and I can use it to trade. So you ensure you go through your registration processes, complete your KYC, and then you place a trade. I will show you how to place a trade, which I did earlier with limit order, but I will show you again with NGN. And then you grab this $5. Ensure you pass through the link. Very, very important. Now you can as well become a tutor like myself. You can sign up using the link on Binance if you have been in cryptocurrency space or been trading for a very long time. You can as well apply for tutor and you'll be given the chance to teach. You can as well follow Binance through the various social handles. You can visit the South Africa version, the Binance US, and some other cool stuff. You can as well join the Nigerian Telegram community, South Africa, and all other platforms that Binance have. All right, now the Q&A section. Okay, while I wait for my time to elapse. Okay, let me wait a little bit. If it does not reflect now, it will definitely reflect. That's guaranteed. So now this is the Q&A section. Now, before we take questions, I would like you guys to, for those of you on Twitter, you can as well, get a Twitter account now. Do this for us, for me as a tutor. Okay, you actually tweet about the training. The format will be given in a group. You put the hashtag my Binance class, then my Twitter handle, and then give a good review and what you learned from this very particular training. You give a good review and what you learned about this particular training as well. You follow Binance on Twitter at Binance Africa. Okay, you follow them on Twitter. Ensure you put this hashtag. Ensure you put this hashtag, my Binance class, and my own Twitter handle. And my Twitter handle is at Paradise Kone. I will put that in the group. Remember, tomorrow is for fundamentals. That is another, section of the training. Very, very important. Very important. And don't miss tomorrow section. Very important, guys. Don't miss tomorrow's section. It's very, very important. Now, at this point, I'll be taking questions while I allow my engine to reflect in my balance. So yet to reflect. So let me just refresh this page again. Okay, yet to reflect, but it will definitely do. So if you have question, I would like to take your question. You can as well put your question in the chat box. where I will see them and then answer them one after another. Okay, so you can ask a question now. Or raise your hand, I will unmute you. You can raise your hand, I will unmute you so that you can ask your question. I'm waiting for questions, please. I'm waiting for questions before we can end the class.
Sir, please hope that this video is being recorded for future study, like
Yes,
future reference.
yes, it's recorded. It's recorded. Yeah.
Okay. And you post it in the group.
It will be on YouTube. We'll send it to YouTube, and from there you can access the video.
But you send the link on WhatsApp.
Yes, we'll send the link on WhatsApp for everyone to get access to the video.
Okay.
Yeah.
Okay, thank you.
So, if you have questions, please, you can ask.
Well done, Mr. Paradise.
All right.
Please, it seems the mobile phone interface is quite different from the PC, that's the laptop interface.
Yes,
I would like you to go at the OCO order again, because I think I was having a bit of challenge in placing orders with mobile phones. Thank you.
Okay. I will go through that. The OCO, that's over the counter. Listen, over the counter orders, but I think that's I will give the answer in the group because we don't have much time now to go through the OCO. Yeah. Any more question?
Hello, sir. What of those that already have Binance accounts? How do they go about? I have Binance account, but the verification is giving me issues, especially the face verification. So how do I go about it? Should I create another account or what should I do?
But you've not done your KYC, right?
No.
Okay, have you contacted Binance support to get clarification?
No, I've not.
Now you can as well, join any of these Binance platform. Okay, you see Binance Angel that can actually guide you through registration process if you're having issues. Now, if you've not done your KYC, I advise you use another email and try again. Okay, use another email and try again. Very important.
Okay, thank you, sir.
Hello, boss. Good evening, sir.
Good evening, yeah.
So please, how do we draw our trend line and what are we using to draw it? Is it on the Binance app?
Now, if you are using an app, it will be difficult for you to draw a trend line. But if you are using a PC, it will be very easy for you to draw your trend line. Like I illustrated, it's very easy for you to draw a trend line. There are principles in which you will use to draw a trend line. Mark 2 points, like in this case, this point and this point, and then you take your trend line for it to be valid, and you draw it out. Okay?
Sure.
You draw it out. Now, don't allow it cross through this point. If it cross from year to year, like in this case, if it cross to this point, it's invalid because it's actually crossing this point. So you put it out.
Okay.
So you are expecting price to come back down and hit, this very level. If it does, it means it's going to go up. Price will hit this level and it will go up. It's as simple as that. All right. Any more question? Any more?
All right. Another thing, sir.
Okay. I'm hearing you, I'm with you.
Okay. This platform that you are using, is it different from the Binance app, or is the same thing?
It's the same thing, but the interface is different. The interface is different. The interface is different. Yes. The mobile interface is different from the
okay, then how can I get
this
one on my phone?
How can you do what?
This particular one that you are using.
This is the desktop interface. That's what I'm using. I'm connecting from the Binance website directly. Okay.
Okay.
So if you want, for you to get the mobile version, you go to Play Store and download the mobile version from Play Store. It's as simple as that.
Okay.
All right. Any other question?
Thank you, sir.
Is any have question there?
Sir?
Yeah. I can get you. Ask a question.
All right. Can you hear me?
I can hear you clearly. Yeah. Go on.
All right. Thank you very much for the good job.
All
Really
right.
appreciate it.
All right.
I want to know, someone who do not have someone who is not using banking app, does it mean that the person cannot make a transaction or by buying, sending money through Binance or what?
Someone that is not using the banking app?
Yeah, banking app.
Like a mobile bank app. No, you have to have where you do a transfer. The issue is you have to make that transfer within that 4 minutes time frame. Okay, so that after making the transfer, you click on I've made payment. Okay, it will actually go and it will reflect in your balance. Okay, it will reflect here in your balance. I think by tomorrow this should reflect, and I will show you tomorrow the reflection of this very, transaction that I just transferred. Okay.
Yeah. Please, another question I would like to ask is that do you have any particular strategy you use or indicators, or just based on technical analysis?
Okay, I use the both, because the best way to trade professionally is to use both technical and fundamental analysis, so that you are not being blind about what is happening in the fundamental world while focusing on your technical aspect. So it is good for you to be a professional trader. Okay, you use both technical and technical analysis, fundamental analysis, so that you know what the market is doing from the both aspects. Okay, so mostly the only indicator I use when it comes to trading is the MACD, but I did not talk about that. Okay, is the MACD. But I think in subsequent training, I will talk about the MACD very well and how to use it to its fullest, use or advantage to the trader itself using it.
I was thinking maybe you'll be sharing which you use in trading.
Okay, I will do that in subsequent training. But the main purpose is for you to know how to trade on Binance, which is very, very important. Now, strategy will come later in our other trainings that we'll be doing.
All right.
I have a question, sir.
All right, ask your question. Yeah.
Yeah, please, sir. What is the difference between spot trading and futures trading and margin trading? Thank you, sir.
Okay, now spot trading. When it comes to spot trading, you are trading one side. Like if you can see my chart, if you enter here on spot and market is going up, you are profiting. You are profiting. Now if you enter here again, market goes up, you are still profiting. Now, if it goes down, the value of your asset will actually reduce in spot. Now, the main difference between spot and margin is that you are not using leverage. In margin, you use leverage. You use, borrowed money, just as the name implies. Margin, you use leverage in margin trading. Spot trading, you don't use leverage. Now, futures Futures is an instrument. It's an instrument, but it's different from spots or margin. Okay, it's an instrument, and it can. I think I can get that out here. Okay, if you go to this, you see features. Now in features, you can see you will see USDT features, coin features. If you go to margin, if you go to margin here, if you go to margin, you can see different markets in the margin through this USDT market, and you see 10x. You see 10x. This is the leverage you are using now. The leverage, you can as well reduce the leverage you are using as well. You can reduce this leverage when you want to trade. Okay, so the main difference is the leverage being used. Spot trading don't have leverage. You just trade normally, and then you can't trade two-way. Another thing that makes margin different is that in margin trading, if market is going down, you can actually short it. You can actually sell, and if it goes in your favor, you make profit. If you say market will go up and it goes up, you make profit. If you say it will go down, it goes down. That is, you can sell. That is, you short it. It goes down, you make profit. You buy here, it goes up, you make profit. All you need to do is be in the right direction of the market, and it uses leverage. That is a very good example of margin trading, spot trading, and features. Any other question again?
Hello, thank you, sir. Good evening, sir.
Evening. I'm hearing
Hello.
you. Yes, I'm hearing you. Answer.
Can you hear me? Hello?
Ask your question. Yeah. One person.
Hello.
Ask your question. I can hear you.
Okay, please. I want to. Please. Hello.
I can hear you. Go ahead and ask your question. I can hear you.
Okay, please. I want to inquire. How do you buy cryptocurrency easy with Binance and sell higher, like without trading?
How do you do what? How do you buy cryptocurrency on Binance and sell higher without trading?
You made mention that. Yes, that one can just be buying cryptocurrency like Bitcoin on Binance and sell at higher price without you really involving in trading.
Okay, now the first thing you can do is to deposit your money first, and then you take advantage of the prices. Now another thing you can do is to take advantage of the P2P platform. This is a P2P platform where you don't actually need to trade. You don't actually need to trade here. Okay, these are people that want to sell and that want to buy USDT. You can see USDT here.
Yes.
They want to buy from you. You can, sell to them here. The same place here, you can as well buy it back. So you can buy here, come to this place, and sell. So you can buy low from these people, buy low here, and come here and sell. You can see here we have different prices, and these guys have their price tags. Okay, but before you go into P2P trading, I think you have to have a verified Binance account, and you have to pass through other verification processes. Okay, so this is one of the methods. P2P trading is one of the methods, and you looking at your chart without actually trading, you deposit your naira, and then when it goes up, you sell it back.
Okay, how do you convert? You didn't show us how do you convert your balance to USDT and all of that?
Okay, it's very simple, except you are joining late. Let's say, let me put this is BTC USDT. BTC USDT, you just go here, buy. Are you with me?
Yes, sir.
You just go here, buy, put your price, but let me go to spots trading. Let me go to spot trading before I made a mistake here. All right, I'm coming. Please, just a minute.
Yeah. With you, sir.
All right, so spot orders. You go to spot order. Then you go to advance. So what you do is to just put your value of your USDT. This is the price.
Okay.
Put your
Yes.
put the amount of Bitcoin you want to buy. Okay. It will reflect. This is 940 USDT, and you place your buy. In this case, is margin. So I wouldn't mind to place the trade. Okay. Once you place your buy, it will reflect in this section. It will reflect in this section.
Oh, sorry. It's not trading. Like, I mean, is it that when you deposit in Naira, it will automatically convert to USDT?
No, when you deposit in Naira, first thing you do is you go to.
That's what I'm asking.
Okay. You go to BTC NGN.
Okay.
You go to BTC NGN so that you convert your NGN to BTC. So once you click on this buy, you put the price, amount of BTC, then you click on buy, you buy BTC. You've actually converted your BTC, your NGN to BTC. Now you can still convert your BTC to any other asset. Okay, just go to the market pair and choose it.
Okay. All right. Thank you very much. I appreciate it.
Any other question before we end the class?
I have a question.
Okay, I'm going to take just one more question because of time. Then the other question I will answer it in the group.
Okay, you can take my own now.
All right.
Can you hear me?
Ask. I can hear you. Ask.
Can you hear me?
I can hear you clearly. Ask. Yeah.
Okay. I just joined some few minutes ago.
All right.
Hello?
I can hear you clearly.
I don't know. Yes, I can see from your screen that there is a recording going on. I don't know if the recording can be made available for us that just joined, because we joined it because of some other things that we are doing.
Definitely, we will share the link to you guys to rewatch the video over and over again so that you can get the best of it.
You can ask a question briefly.
Ask.
You've already joined Binance. Is there any other way I can be able to impute a referral code for me to get by my $5 or something?
Yes, when you want to trade Binance futures, derivative, you want to trade Binance futures, for you, they will ask you who refer you. And then you put that code, that's my referral code. Okay, once you put that referral code, you will get the $5 bonus.
Can you take that again?
I said when you want to trade on futures, you can only get the bonus if you want to trade on futures trading. When you open your futures trading platform, they will ask you who refer you. Put my own code that is on the group, and you will be given the $5 bonus or thank you package from Binance. All right, one more question. One more question.
Okay, hello sir. How do you calculate your liquidity ratio? Your liquidity?
How do I do what?
Sir, I like that question. Apart from hello, sir.
I can hear you. Yes, go ahead.
I said, how do you calculate your liquidity? That is, if you want to place a trade and you don't know what price will they get to for you to be liquidated out from the market. So how do you calculate this on this PC, view?
Okay, now the thing is always from your analysis. You have to do, as a trader, before you place any trade, it's advisable you do your analysis and then you place your trade. It is from your analysis that you will know where you will be liquidated. Okay, you will know where you think if price come to this point. Let's say, for example, this was a support level and the price break this point, you think the price will reach here. So you are saying, okay, if price cross here, they should stop you out. So you are going to take your leverage in such a way that if it comes to this point, it will stop you out so that you don't lose much. Okay?
Okay.
Yeah. So
right. Thank you, sir.
That's just a simple explanation I can just give now, because this training is actually meant for you to place a trade with your local currency, like I showed you. Only that my deposits are not reflected. If not, I supposed to convert my Nigerian naira to BTC and then back to USDT and withdraw back for you now in this video. But it's not reflecting. But I believe by tomorrow it will reflect. So ensure tomorrow class you are here so that you can see another version of the training. Now, tomorrow training is going to take a different dimension, and we are going to talk about something very different. And also, we are going to take a brief look at the P2P section and OTC. Like the other guy asked, OTC, that's over-the-counter trading, people with big pockets that you can actually buy cryptocurrency with a very tight spread that enable you, profits at a very big rate or big margin. So it's very, very important. So don't miss tomorrow class. It's very important. Now, for those of you that just joined too, remember the class is recorded, so there is nothing to worry about. You can go over the video over and over again when I share the link to you guys. So it's very important.
Please,
Don't worry.
Waiting for that. Waiting for that.
All right. Thank you. So at this juncture, I so much appreciate you guys for participating in the training. Thank you very much. But don't forget to do this. Hashtag my Binance class, the tutor, which will be on the group. My Twitter handle, which is Paradise Kone, Paradise Paradise Kone Kone. Then you follow my Binance at Africa, okay, Binance Africa on Twitter, and then give a good review, what you learn, and tweet. Very important. So I'll see you in tomorrow class, and I believe by tomorrow our deposit in Naira should reflect so that I can repeat the process for you guys and withdraw it back to my Naira so I can take advantage of this opportunity. So thank you very much, guys, for
Thank you, sir.
attending the training. I so much appreciate. Now, remember, we are not going to leave you like this. We are going to, follow you up and to ensure you succeed. Now, last thing, when trading cryptos, please, all we said is not a financial advice. It's not a financial advice, okay? So you take responsibility of what you are doing. Financial market trading is a risky trading, so it involves some level of risk. So you have to take responsibility of your trading methods, of anything you do. Nevertheless, Binance is a secured exchange you can use in the world. So thank you very much once again for attending the meeting. Thank you so much. I really appreciate it. Thank you.
You're welcome.
Thank you so much, sir. Thank you.
Thank you so much.
You're welcome, sir. Thank you very much for the lectures.
Thank you.